in this series, we're growing a Robinhood account from $0 all the way to 1 million, and I'm showing you every step of the way of how I get there. Now, today in the account, we did close at $20,580. This is the first time we closed over $20,000, which is a really important milestone in the account. So hats off to us. We were able to do that. We're up $2,287 on the day. 1 month, we're up $7,600 on the week, $6,400. If you've been following along, we were bleeding out for a period of time, but then we made some really strong plays on earnings for Zeta, Upwork, Fastly, and then of course, Apple had that run, and now Unity Software, I think, is going to carry us through the end of the month, hopefully. Now, I'm going to give you an idea of why I entered so heavily into Unity Software lately, because of really the options flow, but I'm going to show it to you on the chart and give you the reason as to why I knew this stock was going to run, which is really important because a lot of people just post flow all the time and don't really make sense of it or why it's important. But in this case with Unity, it's really unique because it's done this before. It did this move over a month ago where we saw that option flow come in slightly out the money, and then it just started running, and then the flow switched, and then it just kept running, and then eventually it flamed out once it hit the next resistance level, and then it kind of chilled out for a bit. And I think the same thing is happening here, which started last Friday, and now it's starting to carry over into this week. But nonetheless, we rolled some positions around today. We got some really far out the money positions. Hopefully those can hit if there is a strong run into the end of the week. But nonetheless, I think the move here is probably going to be done by the end of next week, the 22nd, unless the Roaring Kitty shows up and starts posting about the stock. So really, I just want to hop into the charts and explain that, but also show you some of these other plays because we got like Alibaba earnings coming up on the 21st. Grab is still at $5. Apple, I think, is going to still go. Tesla is in a really unique position where I think it can have like a 40 to 60 point move over a month or two. But we're still waiting to see how the market digests PMI on Thursday. And then, of course, we have the rate cut in the middle of September. And then Zeta, we're still bullish on. Upwork, we're still bullish on. And so that's really what the account's looking like so far. And if you aren't already, make sure you guys join into the Discord because I do post all of the positions here as I actually enter or exit them, as well as, you know, a bunch of people are just making money on different plays, the same plays, just sharing a bunch of really good information. So a lot of value there if you want to take a look at the Discord. The link is in the description. Now, let's just hop right into the charts and let's start with Unity. So Unity was trading in somewhat of this broadening wedge, which I can show you a little bit better here, right? So Unity had this run back in the middle of July. It topped out at 38.92. It hit that level and rejected. Now it's starting to form this broadening wedge right here. It's like this megaphone pattern that's forming. It did have like a day after earnings where it opened really high and just rejected right from that same level. Now we're trying to push back up to that level. So it's more than likely tomorrow, Wednesday, August 13th, we are going to hit this 38.92 level. But last week, price was starting to make this move on early Friday morning. And there was a lot of bullish option flow. So there was about 20,000 call contracts that were traded last Friday on this day. And there were 34.5 call contracts for August 15th expiration, which is this Friday, OPEX. Now, I knew that this 34.50 level would probably more than likely be tested at some point. It actually rejected around there on Friday, and then it came back down. Monday was kind of like a whatever day, and then today it just had this really strong move. And we saw something similar actually happen back, I think it was like on this run here in late June. And what was happening is the Roaring Kitty has these far out the money call contracts. There were $30 call strikes for January 2026. And there were about like $45 million was like his original purchase of those contracts. So that kind of creates like a base around this $30 area on Unity software. And it's going to be hard for price to drop below there unless he sells his position. But he doesn't want to sell his position. He wants to make a boatload full of money, right? He's trying to make $1 billion this year on Unity software. And so the most effective way for him to do this is to essentially try to gamma bridge the share price over time and generate more hype, generate more buyers. And he's effectively done that without really posting anything on social media, just showing up on the options chain with a ton of money. And so there's a lot of hype here, and even hedge funds can actually take advantage of all of this gamma and how much the options chain is loaded. Now, on these like weekly calls that come in, right? So this is like 20,000 call contracts. It was like $1.7 million in premium. So obviously it could be Roaring Kitty. It could just be another hedge fund. I'm not sure. If it is Roaring Kitty, then I got to give the hats off to him, because what he's doing essentially is ramping the price. He's forcing market makers to actually buy shares of the underlying and then bridging the price higher over a 1 to 2 week span using certain option mechanics where dealers actually have to hedge by buying underlying shares of the stock. So for instance, there's like a certain delta associated with these contracts, and maybe it's like a 0.3 delta, right? So that means that on roughly for each contract, which is the right to buy 100 shares of the underlying, the option dealer is hedging by buying 30 shares. Okay. But as price goes higher, right? So as this move starts to play out, the options dealer, this delta starts to go up. So maybe now it's like 0.65. So there's another 35 shares that have to be bought by the options dealer. And this is 20,000 contracts. 20,000 contracts times 100 is 2 million shares that could be potentially fully hedged by August 15th if price is trading over 34.50 for the market maker to remain delta neutral. But instead, what happens is, and what happened back in this run, is like they were buying $25 strikes. I can't write. $25 strikes. And as price went higher, they rolled this higher. And that's the same exact thing that's happening here. And I can actually show you this on the flow. So going back here, you can see that there was these 34.5 call strikes. There was 29,000 open interest at the start of the day. There was 17,000 volume. And there was also basically the same amount of volume. So like 16,000 on the 37.5 call strikes for the same date. So what they did was they sold the 34.5 calls and bought the 37.5 calls. And so price was like a magnet. It first moved up to 34.50. Price got a little bit over that, and the dealer starts to hedge by buying more shares. The price continues to move higher, and then they rolled them to 37.5, slightly further out the money. And then the dealer is starting to hedge against that position, because when you are out the money, the delta is lower. So they're opening the upside. They're kind of like clearing the runway for the stock to actually move higher. And crazy enough, just looking at the total volume, when there's a bunch of volume on Unity, it tends to just make a good run. You can see 180,000 call contracts were traded today. Over 272,000 total, both puts and calls, were either bought or sold today on Unity software, which is massive. If we go to look at the total open interest, this isn't going to show what was actually traded today, but overall there are 665,000 open call contracts, whether bought or sold on Unity software. And this is really the two big ones, right? You got a 30 call. This is the wall that the Roaring Kitty has set up at the 30 call strikes. And then there's also almost 38,000 open 65 call contracts for January 16th, and most of these are also bought to open. So there's a ton of gamma here, and the runway can really start to move price up and to the right if there is enough hype and enough buying and enough of these somewhat gamma bridging like weekly call contracts they're doing. But Nonetheless, because price now, the call strikes went from 34.50 to 37.50. Those are slightly higher than the current price. We're probably going to come back up here and test this 38.92 level, and it's more than likely that we will try to push through towards the next level of resistance, which is at $43.52. And the reason why I know that level is important is because it's where it rejected before, right? So these previous candlestick where it's rejected, you can even look back. There's some areas here that get pretty close. So like right around this 43 to 44 level is going to act as resistance. So that's where I'm looking to take profit on a lot of these shorter dated call contracts, and then probably leave some open just in case the Roaring Kitty does tweet. This stock could at least 100% when he tweets. And obviously if that happens, then the stock could go all the way up to 58, 65, 72, even potentially higher than that, just depending on how much volume he is able to generate. If there's enough buying pressure, there's going to be so much gamma that's needed to be hedged as price is going higher, and the shares will be bought. There'll just be a lot of hype, a lot of mainstream. Everything's going to be on Twitter going crazy. It might even spill over into like MSNBC and CNBC and all these other mainstream media news outlets, and that could actually cause an even more buying pressure on it. Now, the stock, I don't know if I really believe in its long-term value, but it is a great speculative position. So definitely size down, be smart about it. You don't have to risk that much to make a lot of money. At the end of the day, we're here for a long time and a good time, not just a short and fun time. So just be really safe and methodical with this, and that's why I'm kind of playing smaller in this account. And then I have like some other positions that I have in my other portfolio. Now, let's just take a look at some of these other stocks. I'll just run through them really quickly because Tesla is very important. So we're starting with the really important ones right now. Tesla is in such an interesting position because if I just remove all of the drawings that you see here, you can see it had this really big sell-off. Then the April tariff stuff was going on. It came back up and then it consolidated in this area, right? And now it's trying to break to the upside. So last week we played some Friday Tesla calls, which seemed to be the most sure thing in the market, just slamming 0-day expiration call contracts. And we made like 400% on some of the contracts that we sold on Friday. And then now we're actually breaking out of the downtrend of this pattern. And what's more important though, is we actually like reclaimed somewhat of this uptrend as well as this, all right? So we had like almost 2 false breakdowns in this consolidation pattern. So there's not really a lot of interest for sellers, right? Not a lot of people there's not enough like momentum in volume to actually sell the stock. And so as long as the market holds up, goes sideways, doesn't actually have like a broader sell, Tesla is more than likely going to hold this level. Now it came back down and retested this gap that it actually was able to leave open, right? So it came back down and retested this candle close around like 333. It bounced from that level. We only entered into 1 call contract for now because option expiration this week, it might be a little bit dicey. What I'm hoping for is we kind of like form a bit of like a flag here or some sort of consolidation pattern on the hourly chart. And if we can hold this area around like 332 to 333, then we're more than likely going to start pushing again towards 358, but really towards like 365, right? 360 to 365 is that first area that I'm targeting. And Tesla is really coiled. It's also far behind a lot of the other Mag 7 stocks. And so when Tesla runs, it really runs. I mean, you see it make these crazy breakouts like 185 to 273, 100-point move almost. Then over here, it had gap 1, gap 2. Then it just ripped crazy all the way to 360. So that 360 obviously is in a really important level. It's also acted as resistance there multiple times. So if it can get through that level, which is like you'll want to keep some exposure. I have mostly spreads right now just because I have a smaller account. These options are more expensive. It's very speculative. But if you are playing far enough dates out, even like up to 380 to 400, you do have a shot at getting there. It does, if this 360 to 365 goes, you can see how aggressive price actually moves, right? So that's really what we're looking to get over. We've hit once, we've hit twice. Now we're coming back up for a third try. I think that it's probably a good place to start taking profit here and then wait to see if it gets through, or just like load back in if it has like some down days, just depending on where the overall market stands. But yeah, I'm really bullish on Tesla right now. Obviously, they're not doing great fundamentally, but there's just so much hype behind AI, FSD, Optimus, and if Elon does something where he like rolls XAI into Tesla, it's going to be off to the races to the upside. Really like Tesla here, really like Unity here over the next 2-3 weeks. We just got to get through like early September in the market because seasonality wise, it is pretty weak. So there could be a pullback in the market. And obviously we just broke to new highs on both the S&P and tech. But let's just look at Zeta. And I'm not going to go too crazy on all these. Well, this will be a bit of a shorter video, but Zeta did have this really strong gap. It broke out. It came back down, retested the 1778 level that I was talking about, and it bounced from there. Zeta is doing really well. They had strong growth. It was like 35% revenue growth. The CEO is really hyped about AI agent runners that are really making it a lot easier for their customers to target their audience with personalized ads. And I think Zeta is in a really good position, right? It's really oversold. It had this really strong run up. Nothing really has fundamentally changed about the company. It's keeping this same pace that it ran before. And usually when you have like kind of this uptrend line over a longer period of time, usually price will try to come back up towards that area. So what I'm really looking for is it bounce from the 200-day moving average, which is this red line that you're seeing here. It's still well above the 50-day, but it bounced right from that 200-day, which is support. So that's great. So 2 lines of support here. It's bouncing. What I'm looking for, though, is to push back to 1955. If it can hold and break above this level, then obviously the next area that it's going to run to is this $22.73. And if it can get through here and break out, you'll have a longer term broadening wedge breakout. And then there's a lot of other levels that it can trade to. It can trade back up to this 26, 27 level. There's a gap that was previously opened here and it just sliced through it really quickly. So like this 29 level might act as a stronger level of resistance, 29 to 30. So I'd definitely be taking profit on my December, September, October dates, all in this range if it can get through here. So you got a couple different price targets. I'm probably going to try to hold through 1955 since I already profited on August dates over 100%. So I'm really just looking to see like a move to here and then even try to get this breakout. So take profit at 22, see if it can get through 26, 27, 29. Those are all open into the second half of the year, and Zeta does well when it's the holiday season. Now, I think I'm going to cover like 2 or 3 more names. So let's just run through it really quickly. So Upwork, really strong earnings. They bought 2 different companies, really leaning into AI. They're starting to reform their enterprise product, and their platform is really benefiting from AI agent runners as well. They had this false breakdown, right? It broke down. Earnings gapped it up higher. They held the gap. They retested this uptrend, right? So you have all this confluence of price wanting to move higher. They crushed earnings, so earnings were good. So fundamentally wise, like Upwork is probably, it's right now a 1.81 billion market cap. This is probably more like 4 to 6 billion over the long term because they have like really high gross margins, like 80%. They just got to improve on the bottom line, and this stock's going to break to the upside. What you're kind of seeing here is almost like an inverted head and shoulders, right? So you have like the head here, the 2 shoulders. This is the neckline. So 1378 is important. It actually rejected off this level twice here today. But if we can get through to 1462, try to get over the 200-day moving average, this thing's going to be off to the races again. So I'd really like to see it come back and fill this gap again, get through here, 1462. I have shares that I'm holding long term, and then I also have October dates. I'm probably going to sell those. Honestly, I'm going to see just how the market holds overall, but I might try to hold this one a bit longer, see if we can get in the money, 15 calls plus, and then hopefully get over towards this 1780 level, which this stock has been kind of bottoming for a really long period of time. Just improve the bottom line, it's going to run. So that's Upwork. UNH, we do have this is like a share play. A lot of the insiders bought on this first dip back in May. I think that it's pretty obvious that UNH is not going anywhere. People are going to still need health insurance. It does have this little mini gap, right? Like over here at 273 to 283. So it has to get through this gap. There's also the 50-day moving average. Look how high the 200-day moving average is. But really this like area here, this is a low volume node. If it can get over 277, 278, flip that level to support, then we're probably going to get over the 50-day, start pushing back up to like 310 to 321. So yeah, oversold, regulation stuff, all that stuff will figure itself out. Overall, I still think this is a solid buy. Look how long and how much volume was traded at higher prices. It'd be really shocking to not see this try to push back up towards 320. If you want to swing some shorter dated calls or even just shares is fine. They also pay a dividend. There was another one I really want to cover. Oh, it's Duolingo. So I'm really bullish on this company's, it's founder led. I think that they're going to do really well in education with the onset of AI and how that changes the education landscape. Duolingo to most people is really about languages, but they have a bunch of customer data. They have basic math, music. They just rolled out a vibe-coded chess module, and that's performing really well. And I think that they're just going to keep rolling out different topics, generating a lot more interest, a lot more users, and then ultimately premium subscribers. They actually crushed their numbers. So like earnings wise, they're doing really solid, great cash position, growing at 40% top line revenue. Their net debt is $1 billion. So they have $1 billion more of cash than their due debt. Market cap is under 15 billion. It is still technically a little overvalued. For me, this is more of a long-term play. So I don't really mind where I buy it in this range. It could certainly come back down into this buy range. I'll buy more. It could even come all the way back down here. Maybe the market sells off and it sells even more than that. I'm just going to be buying more and more and more of it because I do believe that AI is going to change how people learn. And I think Duolingo is in a great position, having a lot of customer data to take advantage of that. I think this $14 billion market cap could be north of $100 billion in the years to come, but more than likely at least 50 billion. I'm gonna give you like my downside case. This is like base case, and maybe it's even more than that. So, you have at least like a 3 to 6, maybe even a 10x here on shares alone. If it gets cheaper, I'm just gonna keep buying a lot more of this company because I do believe that AI is gonna change how people learn. We'll see how this one goes. I'm just buying shares. Anything under $5 is fine. They got to figure out what to do with all their cash position, but I would just keep holding this one for the long term. Share buys are probably best, or just like buying really far out the money leaps. But nonetheless, I hope you enjoyed this video. Make sure you guys join the Discord. Make sure you guys subscribe. Make sure you like, share with all of your friends. Word of mouth is the best form of communication. Get out of the house for once, touch some grass, and I'll see you in the next video, guys. Peace.